Hello, everyone. My name is Peer from the Lean Hire podcast. And today I have a special guest here. It's Tiho from the Long Term Stock Exchange. And I have met him through actually Eric Ries, who is the founder and, well, the original creator of the Lean Startup book and then the Lean series. And it's very close to what we are trying to do with the Lean Hire. So it's amazing to have Tiho over here. Tiho, welcome to the show.
Thank you for having me, Pierre. Excited to talk about lean hire and remote engineering practices.
Yeah, and that's basically what you have done for the last 20 years, if I'm correct. So you have so much startup experience under the hood, and even outside of startups, you have founded Serbia Serbia Founders. Is that correct?
Serbia Entrepreneurs. That's right.
So Serbia Entrepreneurs, and you have a background that's, I'd say, well, you've been for remote work for the longest time, having a background in Serbia as well. So tell me more about how does work look like at LTSE in this time?
Yeah, so prior to COVID and kind of forced work from home for everybody in San Francisco and New York, where we have two offices, we were basically a remote first culture. We always internally were talking about how from the founding, we needed to be trilingual. We needed to speak the startup lingo. We needed to speak, Wall Street language and the language of the exchanges, as well as we needed to talk regulation and be able to describe the corporate governance innovations we needed to do in Washington on Capitol Hill. And so from the get-go, we needed to establish a type of a culture and remote workforce that would allow us to basically bring these three different perspectives into the company in order to make LTSE successful. And so from the get-go, when we started this, we were first a bunch of, nights and weekends aficionados trying to figure out, how one actually goes about building an exchange or getting an exchange license actually in the first place. We started working on various software for, founders like ourselves, to kind of help others chart the path from, formation through growth, through prep for IPO and going public. And as we were doing that, it turned from this kind of bring everybody who needs to be from multiple constituencies under the same umbrella of a company. And so from the get-go, we were a remote first culture, encouraged, Slack encouraged async communication, but then also had offices where we would kind of go in order to collaborate in a certain way. From the get-go, we had remote engineering, actually throughout the US and Europe, and even Israel. And so we were as I was the initial VP engineering, we structured the company in such a way that it didn't really matter where the work was being done; it mattered what the work output was.
Yeah. And for those listeners who are not familiar with LTSE, and that's shame on you. You should if you're listening, you should know about this. But for those of you who are unaware, what does your stock exchange do different, and why is this so important for the future of work and the future of startups?
Yeah, no, several really great questions. So we received an approval from the SEC to open up a national securities exchange. Last year, we are in the same rung as New York Stock Exchange and NASDAQ in terms of being able to list companies. Yet the companies on our stock exchange are going to have to satisfy additional enhanced listing standards. So you can think about us as a regulatory category above that of NASDAQ and New York Stock Exchange.
Right.
Now, why that is important is because we are what we like to say the first implementation of moving capitalism away from shareholder primacy into multi-stakeholder capitalism approach, where companies are listed on the LTSE, on long-term stock exchange, are going to have to disclose their long-term guiding principles for and growth for all of their stakeholders, not just their shareholders. And so the idea is through this sort of corporate governance innovation or evolution, that we are realigning the interest of the company and its main stakeholders with the interest of the long-term investors for the sake of capital growth, creation, and wealth distribution.
Yeah. Now, I'm not a super deep into the public market, but I think everyone can agree that this current market is almost at the verge of breaking. And we've seen even in the last, I'd say 15 years, that the IPO is sort of like the end game for most startups, where it's like this is the actual goal to reach to satisfy private shareholders to off-sell their shares, which they've bought in seed or pre-seed or in the A and B rounds. And what do companies raise now? Y rounds. So I think your approach is to have companies go public much earlier, to even democratize investing for more people, because angel investing is hard. It's very risky. It's not even a friend of mine said it's not even investing, it's more like speculating, because investing is, as you said, more in the definition of going in early and then providing a long-term, or satisfying a long-term goal. So this is very, very interesting. Which stage of a company, which stage should a company list their, or do they IPO on your exchange?
Yeah, so just statistically speaking, over the last 20 years, the number of publicly listed companies in the US halved. So it's half of what it used to be.
50%. Wow,
yeah.
that's insane.
And it was a steady decline. And also statistically speaking, over the last 20 or so years, the average age at which the company goes public went from about 6 or 7 years or something like that to over 11 years. We can
that's twice
publicly available information. Yeah, so basically companies take twice as long to go public, and there are half of them what they used to be just post.com. And so in the long run, our goal is to help kind of reverse that trend / kind of go back to where we were before, where more companies are going public and they're hopefully taking less to mature to that stage and go public. In the first cohort of our companies, because as I said, our listing standards are in a category above that of New York Stock Exchange and NASDAQ. So that means that we have the same fiscal requirements and maturity of the company requirements, yet then some additional corporate governance listing standards that need to be met. That means that any company that is looking to list on New York Stock Exchange and NASDAQ, if they would qualify there, they can consider qualifying with us, but not the other way around. So we are not, at least in the beginning, where the goal is not to be to relax the standards or relax how companies go public, but really add additional sort of requirements that then certify these companies to be at a higher standard than what's currently happening in the public markets.
And what is a company? Why should a company go public earlier? What's in for the company? If I would be, instead of raising a B round or C round, why would I choose to go public quite early? It's a more governance. It's there's a lot of downsides.
Yeah, absolutely. Yeah, that's been one of the reasons why companies have remained private. SOX compliance, overhead, availability of private capital, especially in the growth stages that maybe used to not exist there 20 years ago, tends to be more founder control or less need to report and easier. When you're a private company, you exactly know who is in your cap table, whereas when you're a public company, you actually don't know all of the people who hold your stock. So there are a number of those reasons. Yet by going public, obviously there's a whole brand moment, and being able to have your consumers or your customers purchase your stock. But also there is the access to capital, and increasingly what is actually happening right now is there are more and more investors that are ESG minded, meaning that they really care about the impact on environment, society, corporate governance principles. And that's been a steady increase actually over the last several years, where we are right now about $1 in $4 in the public capital markets are ESG minded, so to speak. They have this extra requirement from their companies, and they simply don't invest as much in private markets because there are less disclosures. There are less ways to actually understand that. And so
it's actually good for the environment to have more restrictions. Yeah.
Well, more disclosures and more ways of understanding what the company is doing and how they're performing and how they keep the environment, their employees, their stakeholders, vendors in balance, right? And so the reason why I want to go public, obviously, is this access to this additional, let's just call them smart and long-term investors,
Mm-hmm.
in addition to the more typical kind of brand effects that the company achieves in going public. As well as we fundamentally believe, and there's empirical proof for this, but when you operate a company for the long run and you're making these disclosures, you actually end up outperforming in the long run.
Yeah, it's compounding. It's the opposite of hypergrowth, where it's like a short-term high growth company that is just crushing rounds and rounds and rounds, and then they go flat, because it's a much different story than if you have a compounding, let's say, a compounding business model that is based on actual, well, let's call them profits, and it's based on actual reinvesting their profits versus just raising round after round after round. And we've seen, not that it's bad, but we've seen a lot of companies, and it doesn't even need to be WeWork. WeWork is one of the worst examples, but let's just call them fairly unprofitable companies that go public, and there's just no long-term incentive to go in these companies. It's a gambling show. It's the people who, well, got in early and fought for these rounds, might have a lucky day selling 90% of their holdings. But for me, as a public, if I would be a public investor, I would not touch Uber, just because I if it's in the public space, in the public interest, I want to see profits. It's otherwise it's just, it feels weird. So is being profitable a requirement for companies launching on LTSE? If it's still early, is that something you say to the companies who approach you? And I guess there is a lot of inbound demand. Is that something they should be cautious about? How does companies perform on your how would companies perform on your exchange if they are slightly unprofitable or not even at all? How would that look like?
Well, this is really a question for investment bankers, because there are a number of companies, as far as I understand, that actually go public at different stages of their growth, different ratios of how much they're actually burning versus how much, whether they're investing in growth or whether they're already turning a profit. It depends on the business model, depends on the sector. It's a nuanced game. But what I'd like to just repeat is that our requirements are the same when it comes to financial performance and maturity of a company. They're the same as the ones at NASDAQ and New York Stock Exchange. So that means that whatever a company would need to do to satisfy listing requirements in those exchanges / maturity and ability to forecast and perform as a public company, that would be the entry point for us as well.
Okay, perfect. So it's very, very well. I mean, it's good that it's similar because there is these standards, but it's also great that there is less of a, I mean, it's in the name, less of a focus of like flipping than holding, going into a company early. Time in the market is more aligned with your incentives of the incentives of the stock exchange. Now, how does this how did this come together? Like, you just don't wake up and say, I want to build an exchange. Tell me more about the story. How did you meet Eric, and how does this become a company?
Yeah, well, Eric, in the process of writing the Lean Startup book, ended up talking about what seemed like this paradox where all startups that he was working with, they were aspiring to, become bigger and more mature and eventually go public.
Right.
Yet he would talk to public companies, they would complain about some of the friction that they would be experiencing in the public markets when it comes to innovation and how they need to operate. And so we are preparing these as founders, preparing these startups to eventually go public, only to have now a very different rule book by which we need to play.
Yeah.
So the idea was basically, like, what could we do that helps actually restore some of this balance, so that even the startups that do go public can continue to outperform and innovate like they were in the private markets, but have all the benefits of the public markets. And so Eric talked about that in the Lean Startup book towards the very end of the book. He had about like a page worth of the long-term stock exchange explanations. The book was published 2011. Several years later, he ended up actually incorporating the company because this idea simply wouldn't leave him alone.
That's great.
Eventually a bunch of us joined. How I personally I met Eric through Startup Lessons Learned, which was his blog before, where he championed some of the lean startup ideas before he wrote the book. He ended up advising my startup at the time, and we ended up actually recruiting one of his co-founders from MVU, Marcus Gosling, to come and join my company, which was called Ripple, RYPPLE.
Mm-hmm.
And so after we were acquired by Salesforce, Marcus and I wanted to do another startup together. Eric and Marcus wanted to do another startup together. And so that's how the three of us ended up kind of like circling around each other until at one point, late 2014, 2015, Eric said that he was, ready to take on LTSE full-time as an effort. And very soon after that, we started kind of working nights and weekends. And then Marcus and I were joining as employees early in 2016, as first employees in early 2016.
And so you joined as VP of engineering, and then a few years later, you became CEO or co-CEO alongside Eric. And you said it's more like a family of companies. So tell me more about how does that work? Usually it's one company, one product.
Yeah.
But an exchange is such a complex thing. It's not an email client. So what does a family of companies mean?
Yeah. So Eric is the CEO of the family of the companies. The way you can think about it is that the entity that can operate the exchange, it's called the Long-Term Stock Exchange Inc. That is its own company. It has its own CEO, Zoran Perkov. And, I oversee LTSE Software. And one of the customers that we have is the Long-Term Stock Exchange Inc. We have built the software which that company takes to run the exchange. So you can think about it that way.
Yeah. Okay. So that makes sense. It's a software company, and then there's also the the exchange company, and the software company. And the software company has, I think, one of the most amazing ways of marketing, that it just provides value. There's no paid ads, or at least I haven't seen any, but there's no scammy salesman techniques. You just build tools for any founder to make their life less shitty. And I imagine that they can use then the tools when they go IPO on your exchange. So tell me more about the product family that's part of the LTSE Software Inc.
Yeah, so in 2015, we started basically building software. While we were figuring out, how it is that we're going to become an exchange. We knew that we wanted our primary customer then and now and in the future is always going to be the founder, the operator of a startup or the public company.
Yeah.
So the entire company is in the service of people who are operating companies. And so, we are, a bunch of us are repeat founders, and we just said look, we always lack the basic tooling to operate startups, from formation through growth. Why don't we start there and just start solving the problems for, people like ourselves? That's how, for example, CapTable.io was born. Later on, Startup Runway, Fast49A, Startup Disclosure. We have a bunch of these, what we call tools. To your point, we have not actually spent marketing dollars marketing these tools. We are basically word of mouth and SEO focused. And we simply we focus on solving problems and make those solutions fairly easy discoverable, so that startup founders like yourself can sign up and start using our tooling. Sometimes we internally talk about how that is the marketing dollars actually being spent towards building software.
Yeah.
And at this point, we're very glad about the startup penetration, the startup ecosystem that we have. And yes, to your point, we do solve problems at the very early stage, at the formation stage. When you're raising your first money, when you're doing your first preferred round, each one of those, basically, you can call them inflection points. You need additional corporate governance, responsibilities, overhead in how you run as an operator, as a startup founder. The three most important resources that you have: equity, cash, and people. And so we really focus on the understanding how the interplay between those resources, forecasting those for the growth of the startup. And yes, eventually we have a bunch of software that helps companies conform to our listing standards and operate as a publicly listed LTSE company.
Yeah, I think all these products are amazing. NYC, obviously LTSE, well, not obviously, but LTSE has also gone through Y Combinator, so it's a big part of Y Combinator's I'd say technology stacks. A lot of companies in YC use CapTable.io, Fast 409. So this has been such an amazing gift. I didn't even know. Like I read the Lean startup when I was becoming an entrepreneur. It's like it feels so weird. Like it really feels weird to read all the principles and now apply the principles on hiring, which we will go through in a minute. But actually then talk with you about all the amazing products that you provide to such startups who read the book years and years ago. So that's just an amazing story, and it's something that just shows how persistence can actually pay off. And you're still away; you haven't launched the exchange yet, but just surviving the first. How many years is that now? From idea to
you can say 5 years now that we've been building this full time, and Eric's been on it for 10.
Yeah, so just surviving the first 10, it's just amazing, and it's so rare to see because so many startup companies, and including myself, well, there's 4 years, but just go bust at some point because raising money and then you just stop raising money, or there's a coronavirus or a pandemic or founders break up. What would kill LTSE? Like, truth be told, what would be the worst case for you? Obviously, you have raised money eventually to be operational, but what would be the end day for you guys?
Yeah, so to your point, we have not yet opened up the trading operations of the exchange. We're in the final stages of announcing that. When that commences, which then allows us, gives us a permission to go and solicit companies to list on LTSE. So yeah, it's been actually a long time in the making. And yes, we have raised enough money to sustain us through these, what ended up being a lot of turbulence in the market. Like all startups, you can die if you run out of money and you're not, earning more than you're spending.
Right.
So obviously, that's approximate cost of that for a bunch of startups. I mean, look, I'm not going to speculate on what can happen and what won't. Fundamentally, we are pre-opening of the operations. So once we open the operations of the exchange and we are in the process of soliciting our first companies for listing, the proof's in the pudding. Are we going to be able to list the companies and how they're going to perform in the public markets as LTSE companies?
Yeah. And last question about the LTSE, because I think this is such an interesting story. You don't hear a lot of exchanges opening up. I mean, when was the last opening of an exchange, honestly?
Well, before us, the newest exchange prior to us to open up and commence trading was IEX, Investors Exchange. They were featured in the Flash Boys book.
When was that?
It was several years. They basically they started as an ATS, and then I received their exchange approval just as we were raising our first money.
Okay.
So that was several years ago.
Yeah, but I mean, exchanges have been around for so many years, and it's not something that most entrepreneurs just come up with and start. So that's just amazing. And last part that I think most listeners are interested, like, what does an exchange business model look like? Like, obviously you have the software Inc. that can provide technology as a service, software as a service. But what's the normal business model that an exchange operates with, and what's something you can even do more than other exchanges can't do?
No, yeah, both great questions. So if you were just to Google this and you were look at the top incumbent exchanges, you would notice that about 70-80% of their revenue comes from trading or indirectly from trading. So fees around trading, fees around access, colocation fees, data that they produce based on trading. And so that business model is like more trading begets more revenues and so forth. And then about 20% or so of their revenues, roughly speaking, comes from the listing fees for the companies to list on the exchange and the software that they sell, primarily the companies, but sometimes the investors as well. With that business model, the incumbent exchanges are aligned with the trading and the participation and the market share in the national market system, whereas our goal is to align ourselves with our primary customer being the company. So you can think about us as a business model that is pursuing, selling services and software to our publicly listed companies, first and foremost. And if you go to longtermstockexchange.com, you can read about our very simple market and our fee structure, which is different and simpler and more relaxed than those of other exchanges.
Yeah, which is great. There's most people don't know, but there's actually still some wiggle room. It's not everything standardized, so even these stock exchanges can operate differently. Otherwise, there would be not a necessity to have other exchanges.
Correct. Yeah, as an exchange, you basically create your own rule book, which the SEC, post approval process. Then you're responsible for operating it. Then you're a self-regulated organization, which means that you guarantee the performance to that rule book. And so each one of the exchanges and the trading venues have their own rule book for traders, how they participate and how the trading execution happens. And so there's actually quite a bit of variety between the trading models and how traders can participate in the market.
Yeah. That's I think that's clearing up at least some myths that some entrepreneurs have about going public and how these things work and how these structures work. So let's talk about how the tools are being built in the past and how things have changed. Obviously, the SF office is probably closed right now, I imagine.
For the moment, yeah.
And what I feel like, this is such an interesting topic because first, there's so much going on with the lean principles inside your company, but then there's also the part that just excites me every day, that this whole global economy is opening up in terms of knowledge workers, where you have not even the background, but the whole network in Serbia definitely plays a huge role in your technology, and that's something that is becoming the standard today, but that hasn't been the standard 5 years ago when you started doing that. And so tell me more about your experience doing. Well, you haven't really, I was doing a lot of research, but so the lean hire or the lean hiring coin or term was not coined yet. So I'm very happy to be one of the people who are pushing this thesis forward. But you've basically done that in the past, but you just, well, I mean, there's a lot of stuff going on, but so you haven't coined it yet. So tell me more about your hiring process. How does it work, working with contractors across the world, and basically the whole story.
Yeah. So prior to LTSE, I actually had plenty of experience running engineering, for 4 different continents. I started engineering offices in 8 different countries. And through a mix of, having so-called centers of excellence in multiple countries to having, office space where people come in maybe once a week to collaborate, to having fully remote and distributed around the world engineering operations. So I've experienced a mix of those. And at LTSE, we kind of chose something in between, where we had, offices in SF, and we had offices in New York, as well as an office in Belgrade. But, we also assume that everybody is remote first, and they can work from wherever they are.
Yeah.
And especially in New York and San Francisco, we do have work from home days we had work from home days prior to COVID situation happening. If you think about the lean startup definition of a startup, or like what is a startup, it talks about the minimum, team and capital that takes to actually validate an idea and validate whether or not something is a business.
Right.
And so when you start from that perspective, a bunch of these things like an office or providing certain perks or being in a particular location or anything like that are basically more what has happened in practice versus, you can question that how much of those are preconditions or assumptions that are worth questioning. And, we talked about all the tools that we built, and for a number of those tools that we mentioned, we built them with maybe 1 or 2 engineers working on them, but just in a very, dedicated fashion. And applying the lean startup methodology and building it step by step by step. So when you relax, what's been really interesting in our example is, think about how, we're still, in the process of pre-opening the exchange operations, and that took 5 years to get to this point. Which we kind of actually thought in the beginning it was going to take, roughly speaking, about 5 years. So we're right on schedule.
Wow.
In a way. Yeah. It was a bit of a guesstimate at that point, but we were like, well, okay, let's raise enough money so we can actually operate for this long.
Yeah.
But in the process of running a long-term project which has such a binary thing, are you running an exchange or not running an exchange? We thought about like, what are some of the immediate smaller milestones on a different track that would help us build a great engineering culture or a software company, or help in other ways our primary customers, the startup operators. And so when you start thinking about it that way, you then start breaking it down and saying like, well, what if we took a couple of engineers and dedicated them to solving this problem about 490 evaluations, which seems to be, this happened 4 years ago, which seems to be something that like everybody's doing in a rush. Yet there are huge repercussions if you don't handle it properly and you're a growing company. And so how do you go about solving that problem? And it turns out that like you just need to learn a bunch, and throwing like a lot more engineers on it in the beginning is not really going to make you grow any faster. You just need to spend time learning about the domain, and more engineers or more product builders is not going to help you learn faster necessarily.
Yeah, and I think that's a great summary how money actually works in the startup space. That it will not make you it will not really make you go faster if you don't know where you want to go.
Yeah.
So
the main metric, early stage,
yeah.
The main metric is actually not how many lines of code you're doing,
exactly,
or how many story points you're putting out. It's really the rate of learning.
Yeah.
Like
and if you get there so fast by doing just small experiments on again, as a very lean company, it will pay so many dividends. You just don't have so much technical depth. You didn't hire 20 people who are now on the payroll, and you need to get a business and an office. And so yeah, I think that's
anybody who's written code, any code has most likely also written code that never saw the light of day, that never saw usage. And so that's the worst. Like that is the most expensive thing you can do. So the best, that the opposite of that is like not writing that code.
Yeah.
And so what can you do as a startup founder, or as an engineer, or as a product leader, to say like, okay, I'm only going to write the code that I'm highly, highly certain is actually going to see usage. And what can I do before that to validate my approach, to learn from the customer, to learn about whether or not this thing I actually want to build in software. Now, I'm just talking here software since I'm doing software startup, but before I write this software, like what can I do to make sure that this is, has a high chance, high probability of actually working and fulfilling the customer requirements.
Yeah, and that's an amazing bridge to lean hire, because the lean hire basically applies the same principles, where we just treat an employee. It sounds weird, but as a product, and you just want to run as many experiments with that person to identify if that's a viable person to join the company. And so, because I remember when I was 20, we hired our first employee. And it was someone who I met in college, who I just know and who I've worked with. So I already done these minor experiments, being in college, working on the same projects. So it was less scary. But then I got into IC, and I hear these stories where it's like a minimum salary is like 150 up to 200, and it would just scare the crap out of me. And comparatively, companies raise 150 when they got into IC. So spending the whole IC money on a single hat in a foreign country, that's so scary. And I could not imagine doing that. And I was looking left and right, and everyone's like, I don't know how I'm going to hire my first engineer. And meanwhile, I was working with 5 engineers in Germany, still paying less, obviously because of the salaries, than the single hire that they had in Silicon Valley. Applying the lean principles of like working with someone on a contract basis, you can leave out the contract part if payroll is easy in your country, but a lot of countries make payroll really hard. So one way to run these experiments is just to get someone on board really quickly on a contract basis. Now it's super easy to sign up as a freelancer. and you just hand them a product. You just hand them an idea, hand them a very small project to work on, and just see where it goes. And if this doesn't make sense, if it just doesn't have a good turnout, you just didn't commit to a full year or 2 year of payroll contract and blew 150, or even need to lay him off after 2 months. So I think it's super important that we even rethink how we hire in these early stage
Absolutely.
companies to de-risk everyone, every employee, but also the employer. Because yeah, it's so strange. It sounds so strange putting like 150 on a payroll when you have never really met them. And then people say, well, we run these interviews and we run these culture. I've seen like culture type of interviews and like 3 months of culture tests. And yeah, I mean, the culture is the sum of your company, but you cannot run like classroom tests on culture. That just doesn't happen. You need to get the people to work and just engage and see if that's
I agree. It is highly questionable to be thinking that maybe you're a single or a duo of founders and you've just raised 150 to a point that in exchange for 7% post money, and you're gonna spend that on a 1 year of engineering salary, where maybe if you know what you're doing for sure, then maybe that's a really great exchange. But if you don't know what you're doing and you're still highly experimenting and trying to figure it out, thinking about like, okay, before everybody commits full time and before we're burning all this money, what can we do in a per project basis?
Yeah.
On one hand, to test the working relationship, and on the other hand, to ensure that this person indeed is actually going to have enough of a job to warranty a full-time hire for months to come. Right? So like, it's important for the startup, it's important for the culture, it's important for that employee, that person as well, that they know that they're signing up for something that actually there's a there, versus going in it eyes wide open.
Yeah. And I think the sole reason why we have these skyrocket salaries is, first of all, of course, there's big tech companies that can just afford to buy out your employees. But I think it's a closing mechanism. It's just, okay, let's try as like put the money on the table and have the employee just say yes out of, wow, this is such an amazing offer, I need to work for this company. And that's not how startups work. Like you need people who wake up every morning and want to change the world with you and be aligned with your company, with the company culture. And money should not be any point of that. Like, you need to make enough money to pay your rent, which is hard in the Bay Area, I agree. But I've never talked to anyone, and startups never can outpay Facebook. Like, that's not going to happen. So these startups need to play a different game. They need to play a game of just vision and other incentives. So I think a lot of companies just have used this money mechanism as an easy way out to close an employee. So I think that's one of the main things that hiring lean will change, that you hopefully find the right people that commit to your company, not out of having this single once in a lifetime contract coming to you, but consecutive contracts coming up, and then eventually turn that one into a full-time person, full-time, maybe even change from contract to payroll if that's able inside your country. And I think that should be the norm. That shouldn't be the niche way of hiring someone.
Yeah, well, if you think about it, if you just compare one of the large public companies, in Bay Area, they're hiring, let's just say, software engineers, it's highly likely that they have the wherewithal to survive for a number of years, and that, more or less that paycheck, pre-COVID times was guaranteed. But in a startup world, it's simply not the case.
Right.
And so treating these the same way just does not make sense, because in startups, especially early on, we're operating extreme uncertainty. And again, our main goal has to be to learn as quickly as we can for the least amount of money / equity that we can. So then to say like, okay, now we're ready to actually go and build a business, and now we're ready to bet, and hiring to employ all these people, because the worst thing you can do just from the humane perspective is to give somebody, what looks like a great offer only 6 months down the road to tell them, just
Yeah,
kidding,
exactly. Yeah,
we're not viable. And I think that is way too overlooked, and we are way too happy to hire full-time people, make all these grand promises in early stage startups before we have validated the working relationship, the product opportunity, the business viability. There's so many things that are in constant state of flux when you're
yeah,
early
yeah,
stage. It's just that I'm always amazed that people think about like, oh, we just like hired our first time full-time engineer,
yeah.
we're like on it.
From zero work time before,
From
it's
zero,
just like
yeah.
all
And it's like,
in.
wait,
Let's
wait a
go.
second.
All money on blue. Let's
Yeah,
go.
yeah. And look, I've done that in past myself, but that was definitely not the way any of us have come to work at LTSE to begin with.
Yeah,
And we all kind of went through these, kind of like work before you commit, even short-term contracts for the initial group of people until we proven that there's a there.
yeah,
And that we knew that they were going to be able to operate for years to come, so we could actually go and guarantee full-time salaries and full-time employment, knowing that there is that behind us. And again, having as somebody who hired and fired people when things were not going well, like that is not something I wish upon anybody.
yeah,
Especially the people who are actually impacted by those like rash hire and then knee-jerk fire decisions out of fiscal responsibility. And so that is the last thing we should be doing. Like almost somebody should be teaching the founders now, like here's all the things you could do before you actually go and hire a full-time person, and here's all the things you could do before you actually go and fire a full-time person.
exactly. Yeah. No, I mean, we in our company went through both processes of hiring and then also firing, because we had to shut down the operations, and it's just nothing you ever want to wish upon anyone. And it's it, for us, it was, well, I'd say the least worst. Do people say that? Well, the least horrible scenario, because it's just the end of the company. It's just like, okay, we tried everything, and there's just no way out. Um, but yeah, I've seen companies hire and fire and eat up the culture that might happen in big companies, where it's like 2 years of turnover and then it's a new job. Um, but yeah, so the people that I have worked with, and frankly speaking, I don't have their perspective, but I've always put like the long-term position in the company like first, because I know hiring sucks. It's hard. It's such a hard complicated process. So cutting it down first in simple steps, it just de-risks everything. But then also you want to do it like as little as possible. You want to hire, like good companies hire as little as they can. And that's something we need to teach people. That's something that for every hire you need to be able to also lay them off, and you don't want to lay them off. So it's very important. And I think now when
every new full-time, this is how I always think about it. Every time I give a full-time offer, and I've hired over 150 to 200 people in my career directly, every time I do that, now I think about like, what if this does not work out?
Yeah.
And there's always that, like, when you are maybe less experienced, or if you work in a large company, you maybe play this game of like, the more people I have, the bigger my budget is. Or for me personally, in the beginning I thought like, well, this gives me more opportunity or more resources to go and build the thing I actually want to go and build. But now with some experience, I think about it also as a really big liability.
Yeah.
And responsibility. Liability for the business, and a responsibility to each one of the individuals that joined, because they'll be able to guarantee them, full-time employment for years to come. Talk about long-term, not just like for the next 18 months that we have some runway, but like, is there a there for all of this?
Yeah.
And I think all too often at startups, we offer all these like really great perks and make it sound like very, very permanent. But when you look at the data in San Francisco, we're having, I think,
it's not
something
happening.
like 18 to 24 month average tenure, which clearly that it just does not then make sense to be thinking about all these long-term things when on the ground this is not happening. And how can we then structure something in between where we actually also have some contractors, or we have some flexibility in how we spin up and down certain projects, elastically speaking, that is, in terms of resourcing such projects, and not having to like think about like, well, okay, what's my responsibility to these people long term? If I can actually really run this project well, maybe there is some uncertainty, so I'm going to add some resources to verify that uncertainty. Or maybe I just know what I need to execute and I have a project plan, so I'm going to go to the market and get people who can get that job done. And then when we are done, I don't have a long-term commitment with them, or either way. I think those are the ways that I always encourage other startups to think about this, and not to think about it in those typical kind of terms. We are Series X company that raised Y million, and we have B 100 employees in our startup. It's like those are really vanity metrics.
Yeah.
It's more about
doesn't
like,
mean a lot. Yeah, it's true.
Yeah, we raised this much money, but really more importantly, we have X years of runway at this point, and we're committing to not burn more than this per month. And can you help me figure this out with the fewest people possible?
Yeah. No, I agree. And so the other side is saying, well, but this is bad. Contract is so insecure, and it's very risky for the employer, well, for the employee, and you don't have job security, and you don't have all these things. And those are totally valid claims. And in most industries, that's true. Like, I don't want to have, let's say, like a firefighter be on a contract basis, or a policeman on a contract basis. But that's not how tech works, because it's just so fast moving.
Well, yeah, especially startups. I mean, startups are very, startups are a very, very risky proposition, right? And most startups that raise seed or A don't end up raising any more money, and they end up running out of that money within 18 to 24 months.
Exactly.
And anyway, the average tenure in the Bay Area is those like 18, 24 months. So what certainty are we talking about?
Right. And I think the best argument for that is the moment you are running on a contract is, first of all, I'm not sure how it is in the US, but in Germany, you can still get full health coverage. You can get all the benefits. You can, again, it's up to the country, but you can basically get all of the coverage that you would get otherwise on a payroll. But you're also much more flexible in terms of deciding when to work on your own terms, which is something that should be on a payroll anyway, but no one can force you to work on specific things. It's up to you if you want to work on that stuff. Like, you don't have, you're still an employee because you're working with that company. You're a partner of that company. You can get equity in the company without being on payroll. But you still have the freedom of choice, and you can work for another company in the meantime. If, let's say, the main company, your main contract partner is struggling, or there's just no work on the back end, like, how many times do early stage companies need to pivot, and then suddenly this position just has no work for the next 2 months, and then after 2 months this position is valid again, because we need to, let's say, refactor the front end, and then there's nothing happening on the back end. And if you're a contractor and you build up your network, you build up, which you should do anyway, build up connections, you can work on the side and maybe learn a new technology that you've never used before, and then get that learning and bring it back into the company that you want to commit long term. And I think this gives so much more freedom to work anywhere, to work on your own terms, to work on different projects. And for me, frankly speaking, I'm working with 2 companies in Silicon Valley right now that I would never join if I saw the job proposal. Like, I would never join them in full time if I saw them on a hiring platform. But now, having worked with both founders side by side on their projects, it's like, holy shit, this company, this could be something. I want to put in more contract work, and I'm putting other stuff aside because I know this has potential. And I just get goosebumps thinking about how many more great people join when they have the chance to get like a single bit, like a tenth of a job in a very specific company, and be able to put in like 2 tenths, 3 tenths, and work from there and go from there. I think this is it's a highly underestimated tool and a weapon of hiring.
Agreed.
And it's just amazing to see that you've been working on this for 15 years in that type of environment. And yeah, it's just really, really cool to see companies execute this philosophy for the last 5 years and 10 years. And I'm really curious how it's going to change the whole workspace.
Yeah. Well, post-COVID, right? Like we are now, for 3-4 months now in the US, and we are seeing that, this work from home remote culture, and it's going to last at least for a few more months. And I think that's long enough for some companies and for some people to prove that, like, okay, we can still get the work done. Also, I think the whole COVID situation has even more so emphasized how risky and uncertain startups can be,
Yeah.
how fragile they can be. And so again, just thinking about this permanence of offering full-time positions and planning for years to come with a person you're hiring, versus what's happening on the ground, actually the highly uncertain environment in software, in a startup. And so, the work from anywhere situation that's happening right now. And so I think it's going to just encourage more startups to really think beyond just the typical full-time offers that they've been doing, co-location requirements, and not just in the metro cities in US, but really start to open up, looking at other locales and acquiring talent from there, especially because certain countries, or there are certain companies that make the job of hiring somebody in a foreign country fairly painless or streamlined for a US-based startup. And so there's going to be just more of that happening.
That's, I
now,
think,
the flip side of all of this is right, like when you find somebody great to work with, you have a long-term relationship, like I've had with Marcus, for example, or with Eric. And so you want to stay with those people. What I want to say is, like, this does not negate that. This just lets you find those people in a less risky proposition for everybody involved. And so when you do find that you want to work with somebody for years to come, and you do find that project that hopefully is long-term and you want to be associated with, that makes that discovery easier. And there's still that opportunity, there's still that vehicle of equity, of full-time job offers and all of that comes when you have that. But how do you go from, like, okay, I just have an idea and I need to do this, to, like, all of a sudden now I have a full workforce that I'm committing to payroll? I think we're, like, jumping levels of de-risking in between, as well as levels of going from, like, not knowing somebody to committing to a full-term, long-term relationship.
Yeah, no, that's an amazing summary. I think every tool, every product, every service that takes you from 0 to 1 is just immensely valuable. Like, if it's incorporating your company over Atlas or Clerky, if it's organizing your cap table over CapTable.io, if it's hiring someone over leanhire.com, my plug. Yeah, that's just going to change the way companies are being built, and from anywhere, from your basement, from your mom's basement. And that's just going to change just so many, like, paths of both entrepreneurs and employees joining companies. So yeah, I think this is the most amazing thing that's coming out of this whole pandemic. And I'm very, very looking into the future. Like, I'm really interested in the long-term stock exchange. I hope one day I'm going to launch my company there. This would be an amazing look back on the podcast. But until then, Tiho, thank you so much for joining the show. And if you want to leave any plug for yourself, now's the time. What should listeners check out now? And if you have any other closing words, now's the time.
Yeah, if you're in the process of forming or growing your startup, I invite you to check out ltse.com/software. We likely have a tool that would be very useful to you. And if you don't, you can just email us and we'll consider building it.
Awesome. Tiho, thank you so much, and have an amazing sunny day. Bye.
Thank you.